Hello. It's more tax talk on a Saturday night. Got a couple comments on a tax video. Let's answer some questions, kiddo. My favorite part of this video is when you stated that the effective rate will be 60 to 70%, but it will be fine. That's a fairly bold claim given many economists don't agree with it. Are you sure you don't want to bring up any economic research to back it up? Pot shot for being an intern at the IRS. No, good point. It's true that there are many economists that think a high effective rate on the highest income earners, job creators, which is some people call them, will hurt the economy, will restrict growth, will especially move money overseas where there's lower effective rate. That's possible. Those are all valid points. I've built a little spreadsheet to help explain why I think it would still be good. And you arbitrarily picked a formula to determine excess earnings. I've done some refined work on that because that's a good point you made there. Arbitrarily determined tax to be 50%. There's a reason for that. Instead of 36, even though it should be 35, correct. And call it un-American and stupid not to. That's true, I did. Gee, you convinced me. All right, I didn't. Now, kiddo, relax. Here's the new scrap that does a better job of explaining exactly what I'm talking about. So here is a spreadsheet designed to kind of display the point I'm trying to make and its impacts on a very high income earner and what their taxes would be under this plan. And a couple things that are specifically addressing this comment here by JRL. The arbitrarily determining that this tax on this excess amount is 50%. I do believe that you should make a handshake with the government, the federal government, at 50% of your excess earnings, which is really earnings far and above what you would be making just as a person working. You're basically taking advantage of a corporation with a lot of different resources under you to be able to take that kind of salary, which isn't real. To show you kind of what that looks like and why I believe that, here's a sheet and some formulas to determine how to do that. Right, that kiddo? What you can do is the cells in blue here in column B, these ones, you can plug in different variables to determine what you think would be an adequate cut for taxes. So, for example, you're a high wage income earner. Let's go with a large salary, a really large salary, more than you'd see at most companies, $5 million a year. That comes out to $2,400 an hour. Wages for a lower earner, or even you could say maybe the mean of the entire company, what that wage would be, mean or lower median, but you want something on the low end. And let's go with something probably a little higher than the lowest paid employee. Let's go with like 30 grand. Okay, assume that your lowest employee makes 30 grand a year. Now you need to estimate years of lifetime employment. What do you consider to be? Don't get your fingers out of your mouth, kiddo. Eating his hand. What do you consider to be a full career, full life? If you start when you're in your 20s at some company and you work, which should be a lifetime, a lot of times people call it 25 years. People are living longer nowadays, though, and 25 years is a little low. Let's go with 30 years to determine a lifetime. It's your 30-year fixed mortgage, right? So 30 years lifetime employment. It's probably not a bad idea. Everything else here is going to be calculated automatically, and what it's going to do is it's going to say, for example, that your lifetime wages for that low earner, 30 years times the $30,000 a year, is 900 grand. Therefore, according to my logic here, the high wage earner, the really well-paid executive, whoever that is, they have 4.1 million in what I would consider to be funny money, excess earnings. They're earning more than the lifetime salary of the low-level employees their entire life if they worked there at the company. Now, of course, they'd have wages increased and stuff like that, so the 900 would be a little more, but we're just taking their current salary. So this 4.1 million is the part of their salary that I want to attack with a different rate. The first 900,000 would be taxed at the current rate, at 35%, with your normal payroll taxes in there and everything else. But the additional 4.1 million gets taxed at 50. And the differences between the two shows you what would have happened if you would have taxed that 4.1 million at the 35 rate and what it is at this new 50 rate that I'm proposing, and additional tax revenue and the percentage of the gross that's now additional. So, like, basically, this person's effective federal income tax rate went up by 12.3% due to this. even though the jump was 15% between 50 to 35. It's because the first 900 is still taxed at the same rate. So you can start toying with this and say, hey, what's reasonable, right? Because the further out you get, the crazier you get, and that's the whole point of this, the further out you get in disparity between people within the same company, the higher your percent of gross wages increase in tax down here, the higher this thing gets. And of course, nominally, the higher it gets. For example, say this guy's making $25 million, right? 250 million. It's possible that there's a douchebag at Exxon who took a $360 million payout. He looks like a freaking rhinoceros with a hair lip. You've seen him testifying in front of Congress before. This just disgusting excuse for a human being took $300-something million. That money should be taxed at least 50%. To let that screwball, who's part of the oligarchy of oil companies, communicated around the world to keep oil artificially high and doing all these horrible things that they were doing. Yeah, that money should be taxed higher. It's not doing good things for society. And if you compare that even to the lowest wage people at Exxon, put that in there. Put your $350 million payout in there. One more zero on the end. Let's say your Exxon employee's making 50 grand a year, or not 500, but 50. And you have your 30-year lifespan, there's still $348 million in excess earnings. All right, look at that, $168,000 an hour for that year that this guy took this, right? That the board awarded this douche fuck that kind of money. He would end up paying $52 million more in tax revenue. That would be superb. That would be just dandy if that happened. So toy with this around. I'm going to put the sheet up in the video here, and you can mess around and come up with something that you think is reasonable. And you can, of course, change the tax rate of 50% by going in here into this formula and changing that 0.5 to whatever you want. You want to make it 0.4 or something like that if you want to mess around. Make it 0.8. I don't care. The point of all this is this, essentially. What we have is we have funny money being made. Money that is being made that isn't about providing for your family. It isn't about earning. It isn't even about spending. It's a game. It's a game that it's a perversion of the human mind, which is it's greed. It's a number. It's I've got to make more money than this guy. I've got to make more money than that guy. I've got to be on top of my mountain. That's the kind of money that these executives make. And that money does not have the same value as the money that is being made by a low-wage earner. If you're making $50,000 a year, if you're making $35,000 a year, you shouldn't pay as much percentage of your income as you do if you're making $5 million, because it's just funny money. You can see it right here. You can see that an additional $525 grand that this $50 million, or sorry, that this $5 million a year person pays, it's so much more than than even the annual salary of that lower wage employee. That's people. That's people's money. That's food. That's rent. That's money that sustains economies. That's money that aids the growth of a middle class or a class that has some disposable income. It's funny money. It's funny money, and funny money deserves a funnier tax rate. Deserves a higher tax rate. So you're gonna have difficulty moving me off that stoop. I really believe that to be true. So play around with this. Let me know what your comments are. I would love to talk about this more, because what we need sustained change in the tax code, and we need to increase revenues because our government, when it works properly, redistributes money to other companies and keeps things going. Our government isn't cheap. We overspend. And that's actually good for an economy, especially when the entire world is based on the dollar. Don't compare the United States to other countries, because the entire world, except in China, goes off the dollar, uses the dollar as their reserve currency, which means we can kind of do whatever we want. We can print out whatever we want because everybody uses the dollar, and people have full faith and credit in the U.S. government. And they're going to continue to do that, because no matter what kind of crazy debt we run, it's still the United States. And if we still have a society that works, that works, people still want to come here, and it's safe, we're always going to have the dollar. So anyway, I'll upload the spreadsheet. You can download this, mess around, and keep the comments coming. JRL.